This is our Forex blog for October 31st, 2013, and these are our currency indexes, which let you see visually what each individual currency is doing. You can see the dollar. The daily trend's up, the weekly trend's up, the monthly trend's down. You can see late last night it was trying to make a run for the high, pulls back, broke the hourly moving average, and then went back above it. And you can just basically draw trend lines. You can see previous swings. You can draw Fibonacci pullbacks on this, and it also works on multiple different time frames, whether you want to use daily currency indexes or even longer term. You can see where it is in terms of the range from the last huge move up, and it's hovering right at the 62% retracement. So the move was to the upside, and that allows you to, especially when it double bottoms right here at 9:30, 10 o'clock, to be a buyer of the dollar. And you can clearly also see the euro was underneath its hourly moving average. It was underneath the lowest low that it was at the previous day. So the euro is extremely weak, and it breaks down, at 6, and you can see the dollar close to 10 really got strong. And basically you want to sell the weak ones versus the strong one. You could have sold the euro against versus almost everything, but the euro dollar coming up to closer to 10, very high probability place to sell, and you can see that's exactly what happened. You can get short, put your stop right above the high, and even if you got out somewhere in this range right here, you made 5 or 6 times, or I should say 4 times more than what your risk is. It's that simple. Now obviously the dollar wasn't the strongest one today. You can see the pound was in a downtrend. You can see a trend line off these levels that got broke right around 8 o'clock. The euro was extremely weak, so looking for euro pound sells at 8 o'clock. Very high probability. And even before that, if you're actually watching this chart, you can see, it broke down. That's back between 5 and 6 when the euro collapsed. It took it about an hour, and this one did as well. And so you're basically looking for some kind of a pullback after 8, and it really doesn't have one, but it does go sideways for about an hour and a half. That's a pretty high probability pattern too, because your risk is a tiny amount, and most of the time when a market sells off and gets no bounce whatsoever, there's no buyers, and virtually almost every time it's going to go to the fib target off of that wave. And so as you can see, it went right to that fib target, as I said, and I've said this in classes when we did classes every day for 5 years. I've said that almost every day. In most of our Forex blog videos, you can go back years. I say that every day. I'm not just saying this today because it happened to work today. This is what typically happens. You don't know if it's going to go to the first fib target or the second one, but even if it only goes to the first fib target, your projected profit is 2.5 times. And in this case, it made 3.5 to 4 times more profit than what your risk is, and that's the key to trading. Typically, anytime a currency makes a big move down and does not retrace at least the 38% pullback right here, it will tend to go to the 1.618. And I can show you that in another instance example. Let's find another one that's quite strong. You can see the CAD, extremely strong. So we have a strong CAD, weak euro, and you had the exact same thing that happened. This one's trending down, and it really gets no bounce at all. This is the first period where it goes sideways for about an hour, so you could use possibly that as the low, and look where it went, right to the 1.618. And that tends to be where the big buying is coming in. If it doesn't get a bounce off of that, it's clearly going to break down and make a big move, because anytime a market makes a huge move like that and gets no move in the other direction, it's not normal. So when you see these strong trends like this, you can use our perfect oscillator as a timing tool. Clearly this is an uptrend. You have these areas right here showing extreme counter trend moves, and at 10 o'clock right here, it's a pretty decent place to be buying the New Zealand. the euro was just flat out weak all day. So you could take a look at the euro New Zealand sell at 10 o'clock. As I was saying, at 10 o'clock and also at 12, it's likely the New Zealand to go up. And you can see at 10 o'clock right here, you know, if you kind of look for a little pullback up, you go short, and you can see it kind of drifted down a little bit, and also had this 12 o'clock period right here, coming up to 12, when it was likely to get a bounce. The same thing happened. And the same exact thing happens when the market's at an extreme, like at 9. It's likely no more to go down. And you can see at 9 o'clock it stopped going down and got a little bit of a bounce off of it. So you can use our currency indexes not only to predict likely high probability places to buy and sell. For instance, the Australian, it was trending up, then it pulled back, and you got this nice little pullback right here. If you look, you can see that our perfect oscillator went above the Bollinger Band, which is typically a place to sell it if it's in a downtrend. So at this particular time right here, you want to look for a currency that is in an uptrend and maybe has pulled back to buy or sell against the Australian. So let's take a look at some of the other currencies. Yeah, here's one right here, the New Zealand. Strong trend up, pullback. You know, it's just kind of sitting there going sideways. This one's likely to pull back. This is likely to go up. This would be ideal if it was at the lower Bollinger Band on the perfect oscillator. But coming up to 11, the Australian and New Zealand is very likely to go down. And this is one of many, many ways to trade using our software. But as you can see here, coming up to 11, just like I said, you can go short with your stop right above the high, and you can see it pull back about 22 pips. It's a significantly bigger move than what your risk is. And so this is just one of many, many ways. Trendline breaks, Fibonacci patterns, flag patterns, sideways rectangle patterns, to use the currency index to predict future price direction.